trust.
People in Washington County, Tennessee, still trying to figure out what the new property assessment means for their financial situation. Good evening, I'm Casey Marler. Residential values went up over 68%. However, that doesn't mean taxes will go up by the same amount. While residents still figuring out the increase in taxes, there's another aspect to consider: insurance. News Channel 11's Karen Jenkins breaks that down. Good evening, Karen.
Hey, Casey, that's right. One of the things the assessor of property told us yesterday is that people should check with their insurance companies to make sure they are carrying enough insurance now that their home values have increased.
Property owners in Washington County may be wondering what other costs are associated with having a higher valued home. Higher insurance rates may be one. That's why it might be a good idea to check in with your insurance agent.
You know, Washington County, I just got a tax assessment that says my house is worth $565,000. How much coverage do I have? And that agency is going to say, well, you have $400,000 plus we're going to give you bumps, so maybe you got $480,000. Then you can determine if that's going to be close enough for you.
Agent Joey Profit says most insurance companies do have what's called an inflation rider that assumes a home's value and cost to rebuild will increase around 3 to 5% a year. And that's why you'll see insurance premiums go up periodically. But sometimes those riders don't keep up with the true cost of rebuilding your home if the company isn't reevaluating individual policies often enough.
And the cost of materials rise, then we got to make adjustments to you. The problem nowadays is the cost of materials have went way up, double or more. So a lot of homeowners are underinsured.
Even before property assessments went out, some property owners were questioning their insurance coverage. The HOA president of this condo complex in Johnson City had their insurance company do a rebuild assessment this past fall and found out it would cost nearly $2.5 million to rebuild if there were a catastrophic event. Yet the condo association was only insured for $1.4 million. So the insurance coverage was increased to make up for that $1 million gap, and the cost was passed on to owners through higher HOA fees. Profit says to avoid such gaps, he recommends what's called an HO5 policy, which is a fully guaranteed policy with no cap. That's compared to an HO3 policy, which has a set rebuild limit.
And at the end of the day, you got to have proper coverage. If you don't have proper coverage and there's a claim situation, you might be left without a home.
Insurance agents also say it's good to reevaluate the coverage on the contents in your home because, you know, inflation has risen the cost of everything and replacing those items has probably increased as well. Casey?
Karen, thank you.